the rupee slumped to a record low near 69 to the dollar on Wednesday on growing worries that foreign investors will continue to sell out of a country facing stiff economic challenges and volatile global markets. The pummeling in markets sent the rupee reeling 3.7% to an all-time low of 68.85, with the unit closing just a touch off that, at 68.80, 81 per dollar, its biggest single-day fall since October 1995. It closed on Tuesday at 66.24, 25. In absolute terms too, the 256 basis point fall in the rupee was the biggest ever. An assault on the physiologically key 70 level now appears imminent, as intervention from the central bank seen mid-morning only gave the rupee a brief respite. In the stock market, state-run Life Insurance Corporation, which was spotted buying shares, allowed the domestic benchmark index to erase steep early losses and end the day stronger. If steps are not taken to implement the reforms necessary to tackle the structural issues, the government will be left with the so-called 3D options: debt default, devaluation, deflation, said Angelo Corbetta, head of Asia Equity for Pioneer Investments in London. In India, devaluation is happening now and deflation could be about to start. The good news is that the debt default is highly unlikely. Foreign investors have sold almost $1 billion of Indian shares in the 8 sessions through Tuesday, a worrisome prospect given stocks had been India's one sturdy source of capital inflows in the first half of 2013. If more foreign investors throw in the towel, traders fear it will put the country in a vicious cycle, in which the hit to confidence in turn slams shares and the currency even harder. Policymakers have consistently struggled to come up with steps that can convince markets they can stabilize the rupee and attract funds into the country, despite extraordinary measures last month by the central bank to drain liquidity and action to curb gold imports and cut India's huge oil import bill.